Hello, everybody. Welcome to the Option Omega Show, the OO Show. We are back. We don't like to take days off in trading or in really anything. I was forced to take a day off yesterday because I pulled into my pulled into my house, and realized that I had locked my keys in my house. And so my wife was across town, couldn't do it. So you guys didn't have to listen to me yesterday, but sadly you didn't get to hear Matt or Dan. Morning, fellas. How you guys doing? You guys doing okay?
Doing good. Good to be here. It looks like maybe a little bit breather in the panic to the downside today with a decent PPI number, at least so far.
Yep. We're I think the fear is starting to slowly, or at least people get used to the environment. You know, the market always front runs everything. I had a friend yesterday that was like, "Hey, are we about to crash? Like really crash?" I'm like, "Well, we could, but also this is what happens before a rally. Like usually you'll get the worst news in a month, like the worst tariff news, but the market already front ran it. Yeah. So when you think the bad news is really going to affect you, the market like rallies and stuff like that." So anyway,
Troy, maybe if you could do you remember the song by BB King, "The Thrill Is Gone"?
Oh, yeah, certainly.
If you could maybe you could kind of put that to the blues thing, but the fear is gone, baby.
Oh yeah, the fear is gone.
The fear is gone to a
I'll
blues.
See what we can do. I'll see what we can do with the copyright. Not even gonna get into it. I saw BB King live. I love BB King.
Did you really?
Yeah, I love blues. Wow. I saw BB King and Buddy Guy together in Knoxville, and it was a thrill. The thrill was not gone there. So,
can I give you a little meaningless information or meaningless? So we lived in Westmont for a while, and I liked high school basketball. So I went down the street to see Westmont High School basketball. That's how desperate I was. They were like the smallest class basketball. But on their team, they had an all-stater. His name was Morganfield. I think Mackenzie Moore or whatever. It was BB King's son. And
oh, really?
Yeah. So I used to go there. I could say I saw BB King's son play basketball for Westmont High School. But yeah, he was quite a legend.
That's awesome.
And did BB King ever go to the games?
No.
Was he ever seen there?
If BB King was there, I would have gone, sat by him and just, "Hey, Mr. King, how are you?" But no, I didn't see BB King. And, but yeah.
Yeah. Well, listen, it's a professional show. We've talked about blues. We've talked about everything so far. Let's get the show started.
All right.
Every morning at 8:45 Eastern, Option Omega's got your back. Troy's dreaming big like LeBron, mass back testing like a daddy Mac. Dan's 30 years got our way, trading life and markets every day. Option Omega, you're traded home, where every move makes you feel less alone.
I whistle it to my kids. I sing it in the truck. Everything about it is perfect to me. All right. So let's jump in. We got the zero DTE rundown today. We got three things on the agenda, fellas. First off, the reviews are starting in, coming to the show. And talk about that. Talk about PPI. And talk about the new SEC Iron Condor strategy. We're going to hit on that a little bit. So,
oh boy.
First off, let's go to some review. So, been on the show for a little over a week and a half now. Reviews have been really, really positive. I haven't looked at these myself. I kind of just compiled these this morning hazily, so we'll see what happens. But here we go. First review here. Oh, cool. Options Expert 83. Love the show. Lose the fat one with the beard.
Who are they? Are they talking about me, Troy, or
no? I think they're talking about me, Matt. That's unfortunate. Now, Matt manages the YouTube, so I would think that he deleted these, but that means that Matt's sending me a message too. That's okay. That's all right. We'll keep going. I love these reviews here. ABL, always be learning. Awesome to see Dan and Matt share their knowledge of trading. The fat one with the beard needs to turn his camera off and use a voice filter. His face and voice make me mad. Okay, well, I hear that. I thank you very much. Always be learning. I appreciate that.
It's good you thumbs up that one.
He thumbs up.
I was about to say, it looks like someone thumbed up that one. That's fine. All right, we'll keep moving here. Okay, show biggest fan. This will be good. I am so thankful I found the show. Thank you, guys. I was really struggling in my trading recently until I came across the show. The insights you provide into the market have been invaluable to me. The show has quickly become one of my favorite morning routine. Also, the guy with the beard absolutely sucks.
Another thumbs up. Another
thumbs up.
I mean, it's what are you going to do? All right, and then this one I think is a good question. Footymon. Do they call it the Dow Jones because you're supposed to put all your money there on down days? Okay, that's also bearded one real dumb.
Bearded one real dumb. Okay.
That's sad. All right, guys. Well, I appreciate you. I appreciate you. That I hear what you're saying, and we'll take that feedback and we'll go from there. So, Matt, Dan, it sounds like you guys are doing awesome. It's fine. But we'll keep going. So, PPI. Anything noteworthy on PPI that you guys saw this morning? Looks like a nothing burger to me.
Yeah. Feels like the somewhat forgotten younger brother of CPI yesterday, which provoked a much bigger response, as it often does. CPI having more of the attention, but I haven't looked at futures. They were down a little bit, but nothing like they're down 12 points. Nothing like the 70, 80 point excitement we had a couple days here in the last week. So it's the question of number one, what PPI did, and number two, what's the influence it has on the market right now.
When they opened up 90 yesterday, like CPI, when CPI came out and it popped 90, and then we reverted back down to unchanged, I thought this is the one. Like I really had a moment where I was like, this is capitulation. This will be the thing that gets us VIX over 30 if they meaningfully take this down. And it just kind of stopped. It stopped at kind of like, I think we were down 10 at some point, and then we just rallied.
Yeah. And it seems amazing when you look at all week, we've been near the 5,600 level in the SPX, one way or the other. We would wander from it, come back to it. But when we talk about this fear abating, right? It's, VIX the VIX closed at 20, near 28 on Monday, 27 on Tuesday, and we're probably going to dip in the 23s, probably if it continues like this with the E-minis were down. I think when I was going to Panera, they were down 23 points. Now they're down 11. But, to drop 5 or 6 VIX points with SPX basically being in the same area. And it's just like, okay, we get it. The tariffs are here, but now it's the market, it's just getting less crazy. I mean, next, we have a reprieve here. All the major data is out for the week, but you gear up, you get a good rest, some exercise over the weekend, and then you got FOMC next week. But I just think, that this quick, I think it says something. I'm not sure what, but it says the fact that if there was, the fact that so quickly we get in 23 is not a panicky number. It's just slightly outside the upper range of the VIX over the last 12 months. So, for people who were, I know you have a lot of 0-day people, a lot of 0-day do the iron condors, get used to not having, people doing 0-day iron condors in a 15 or 16 VIX environment might get 80 to 90 points if they're lucky between the two short strikes, right? And we had a lady in our community yesterday. She lives in Switzerland, and she was posting one, and we're talking a 7 delta call and put, but you're getting like $1.30, 220 points between the strikes. So
zero day?
Yeah, 0-day. But I think,
wow.
yeah, and I think that's the thing for people who like credit spreads or iron condors, whether it be 0-day or 30 days, the VIX coming down is like, not that the party's over, but the party isn't as good as it was a couple hours ago, right?
Yeah.
And that's the biggest thing. You're not going to get as much room, whereas and it worked. That iron condor worked well, but anyways, I think that's the story of the VIX. A little less panic, and but to me the biggest thing, and I'm thankful as looking at the back testing tool, you make sure that people, execution, you call it, what's the 2-tap, or is the
consecutive hits at the profit target. Yep.
Yeah, 2 hits. Because if you look at the price, the execution on trades over the last 4, 5, 6 days, these mid prices are, for a $5, $6, $7 spread, they're all over the place.
Yeah.
And that's where I think our biggest risk for beginners was just, hey, I'm going to go in. This looks like mid price, and you pay $2 higher for something. And I think that's the biggest risk in the fast market, is just, can you having enough experience that you don't get your face ripped off by execution.
That's right.
That's a horrible imagery, but anyways.
No. But speaking of iron condors, saw this week there's a new condor strategy. It's the SEC iron condor strategy.
I love it.
I was going to ask if that was the Securities Exchange Commission or the Southeastern Conference, or
I don't know if you saw this week. I don't know who Ronald Pollock is, but basically he was selling his marketing, kind of like, I'm a master, invest in me. I don't know if he had a hedge fund or anything like that, but he got people to invest in him. And he kind of lured them, saying, I've got this strategy that's really, really unique. It's called an iron condor. And,
wow.
But my iron condor doesn't lose. My iron condor wins all the time.
Wow.
And so it was a Ponzi scheme. He was obviously not winning all the time. So whenever people would ask for money, he'd just have to take it out of the investment, and we know how that goes. But it was made me think, Dan. I mean, like, you've traded and you've taught trading forever. What is it about a condor? What are the good things about a condor to where someone who's really new to options might be lured into something like that? You get an investor, it's like, I got this strategy called iron condor, and they teach the basics of it. What is it about iron condor that makes people say, oh man, this is the perfect trade?
That's a good question. I don't know. I mean, I hear people say that about every strategy. I think it's, the problem isn't the strategy. All these strategies, there's not a strategy that, in my opinion, someone couldn't get decent at if they treat it as a craft, had some reasonable risk management. They might not trade it all the time. But I think iron condor was just, maybe 15, 20 years ago, you didn't have as many retail butterfly traders or double calendar or whatever. So I think maybe just through education, I was teaching a lot more 20 years ago, iron condors. And I think, but the thing where I think people, and I don't know this gentleman, Pollock, but I think the biggest thing is, I used to follow some iron condor newsletters. and I would just watch them. And the observation was they would go well for about 10 months because it's a high probability trade. And they would go well, they're winning, their track record's great. And then month 12, when the market fell apart, you didn't see the newsletter anymore. You tried to get to the website, it wasn't there anymore. And it wasn't that the iron condor's bad. It's just recognizing that what is an iron condor? Out of the money call credit spread, out of the money put credit spread. It's not a great risk reward. That doesn't make it a bad trade. It's a high probability trade, but you make like an iron condor. You can make $1 to lose 900, or make 150 to lose 850. Yep. That doesn't make it a bad trade. What makes it a bad trade is the person at the control center, right? Just the pilot doesn't make, a bad pilot shouldn't make the plane bad. I mean, it's the plane is good. It's the pilot who maybe misinterprets so I think the bottom line with iron condors, because it is a high probability, low risk reward, I think it just has to come like risk management. It has to be, okay, you're making $1.50 to lose 850, right? All right. So you have this $1.50 you could make. Let's say you're trying to make $1 of it, right? And maybe, hey, I'm going to look to make $1. I have the probabilities in my favor. Well, that's the easy question. What are you going to make? But what are you going to lose? And I think as a general principle, you don't want to lose more than 2.5, if you want to stretch it to 3 times what you're making, because you won't get it back, right? And you can tell if somebody who's trading iron condors understands risk management a little bit. If they're making, they make 150, 150, 150, 150, lose 800, right?
That's right. Yeah.
Because that's just saying, and I'm not saying, you can have different thresholds on a probability trade, but I think that's the big thing. And I think Pollock, I didn't read the comments on, or the things on it. That's probably what happened, right? He had a couple trades that went against him, and he didn't really have that part of the trading nailed down. And I think that's the nice thing, with the tool options of you have risk. You have something, right? On the other end,
built into it. Yeah.
Yeah. If this thing isn't going, and that's all it is, because you're going to win, right? I mean, if you back test any iron condor strategy, you're going to have a great win rate, but you can't give away 10 winning trades for 1 losing trade. You're going to get discouraged. You're going to lose,
Yeah.
Anyways, I didn't mean to give a whole,
no, that's perfect.
There, but
that's perfect. And I'm actually going to share your screen, Dan. Would you be up for a minute to just talk through like some risk management stuff and like real life, looking at a graph and toss of like what it would look like to manage that?
Do you think, did you want to look at a 0-day or maybe a 30-day, or do you have any preference?
I tell you what, let me show you my screen first, and then maybe like we can graph this out strategy a little bit.
Yeah.
That's okay. But one thing, as I say real quick before we do that, if you notice like all of these Ponzi scheme stuff, and all these people who crap, like absolutely like just destroy people's accounts. Do you remember a couple of years ago, it was during COVID, I think, it was optionsellers.com or .net or something. He was a guy who had a fund, and he sold, I think, naked strangles in natural gas. And he did it for years. And he basically, teaching classes, had a book out, like this is how you do it. And I think the thing that's always the allure of anybody who knows, if you're new to options, a condor basically is just a risk-defined strangle.
Yeah.
So naked strangle is even more ridiculous. But anybody who's doing this, the thing that's always alluring to people is you say, you can win in any market. You can win when the market's going up. You can win the market's going down. You can win when the market's not doing anything. What other strategy in the world can give you that? And the answer is, options are unique for that.
Yeah.
The downside is anytime you have a high probability trade, this is what I've realized. You really can't take many, if at all, full losers. That's just the name of the game. You can't take any full losers.
Yeah, and it would just, and the other thing, is Yeah, I talk with Matt a lot about this. Just it's very difficult for people to have either a big loser or three consecutive losers. And when you give up in an iron condor, and it could be once a year, honestly,
Yeah.
it could be once
Yeah.
every 6 months where you give away 10 trades in one trade if you have no risk management. I mean, that stings. I mean,
Yeah.
that's like what you start walking around at 10 at night talking to yourself. I mean, that can lead to a lot of things, Troy. That can lead to a lot of things,
So
What's he
that
doing?
explains
What's wrong with your
explains
neighbor? He
my
got killed
demeanor.
on an
Yeah,
iron condor. Yeah.
that's right. A lot of late
Yeah.
night iron condor drives.
Yeah,
Yeah.
it's so Troy, the video you're referencing, it's easily YouTubeable if anybody wants to find it. And yes, optionsellers.com. But if you go into YouTube and type in natural gas hedge fund apology, you'll find the video. But it's interesting because you guys talked about the high probability and that actually the comment section as soon as you were asking why people are attracted to iron condors, yes, high probability, which shout out to our audience, by the way. We're starting to get some regulars, so thanks for showing up and talking every day, guys. But what's interesting about condors is, like in 2022 when we had stickier VIX, I remember it was a pretty commonly shared strategy in the OO community at the time to do high delta condors, which is a totally different discussion. As Dan sets this one up, when people talk about high probability condors, most people are selling farther out of the money condors.
Yeah.
Very wide. So small losers, you win nearly all the time.
Yeah.
And it's interesting in sticky high VIX because then you can look at some condors that have totally different risk rewards, which are still the structure of an iron condor, but your risk reward is totally different. And you can still have big losers, but your potentials for big winners is higher and your win rate is lower. So it's just a completely different risk management perspective and a different setup. So
that's a great point.
There's a million
like
ways to slice the apple.
Yeah. Oh, it's like you have the iron butter, picture the iron condor, as Matt said, out of the money wings. Iron butterfly is at the money wings. And then you have all that room in between.
That's right.
That you can massage these a little bit if you'd like something, maybe a little better risk reward, give up some probability. So there's something to fit everybody. Yeah.
Yeah. Let me share my screen real quick. I'm going to show you an iron condor. Now, this is a weird iron condor, I grant you, and it might be a little bit too much for some people, but this is the option to make a portfolio where you combine tests, and there's two tests in this. And there's basically a call credit spread and a put credit spread. Both opened at the same time. Both opened 9:32 in the morning. And basically what they do is they're both a 22.5 delta condor. There's no trick to that. Just play around with the deltas and you can find it out. But 22.5 delta and 75 wide. That's a very wide spread. I mean, you're basically trying to synthetically do a naked strangle, in this. And you open the trades first thing in the morning. This is only testing one contract per spread, right? So you've got one put credit spread, one call credit spread. We're not doing any allocation, anything like that. You're fine. And then on the puts, the only difference is on the put side, you exit as soon as the short put is tested. So if the short put gets tested, get out. Now, if it gets tested, get out. But I'll show you this real quick. If it gets out, wait 10 minutes and re-enter it. So the other one is the same one. The call credit spread, you exit when the call is 2.5 points past the short. So you have a little bit room on the upside. Same thing. You wait 10 minutes if it's done, and you open that again. So what you're doing in this, the reason I put this in a portfolio is you basically have a condor that you're starting, and let's say it's right here, okay? And let's say this side gets tested. I don't know what side this would be. Put side, for instance. This put side, it goes down, and the put gets tested. You wait 10 minutes and you open another one farther away, the new 22 delta, right? So theoretically, throughout the day, you're expanding the condor as it gets tested.
Are you just testing the bad side? I mean, you're just moving the bad side or the whole condor?
You're only moving the bad side.
I got you.
You're only getting the side that gets tested. So first off, this isn't the way I trade. So, I kind of leave it to the masters, and Dan is the master. Like, Dan, what do you think of a trade like this? I mean, it beats the S&P, right? But you look at that graph, and the graph is very much kind of mirroring the S&P in some ways.
Yeah. Try one quick question. Are you moving the short when it's basically in both situations? When it's basically, are you adjusting the bad side when it's near the short strike?
You adjust so basically how the mechanic works is it hits the short strike.
Yes.
So price hits the short strike. You close that out. You close that put side out. It waits 10 minutes, and then it opens up a new 22 delta
further out.
Put credit.
Yeah, I got you. Yeah, the thing that hits me on this is, it's according to the legit. It's done well. Starting capital's gone up. It looks pretty good, right?
Yeah.
Now, my thoughts on iron condors in general is, if you're adjusting the tested side, by the time my experience has been, if you wait on an iron condor till it hits the short strike before you adjust,
I was wondering,
it's like you're going to be 6 feet down in the hole before you. You're half drowned, especially early in the trade. If we go near a short strike, especially if it's maybe 3 weeks out or a month. But if you have a 0 day and it goes to the short strike in an hour, you're hemorrhaging. So yes, but and you have that concept probability of testing, it'll back off, but you're looking at your P&L thinking, oh my goodness, so if you could handle, in something like this, I would say, if you just had no fear, none, and you can handle the P&L that it's going to go to the short strike and then we'll probably back off, right? That's great. Mm-hmm. But generally, I would adjust things when on an iron condor, whatever delta you're selling, like Matt said, you can go, out of the money, or high probability would be, I'm going to sell a 10 delta call, 10 delta put. Yep. An iron butterfly would be sell somewhere near a 50 delta call and put, but you can sell a 20 delta call, 20 delta put. But in this example, whatever the put delta that you sell, right? Let's say it's 20 or 15, whatever it is. When that delta goes up by 6 to 8 points, you're starting to lose money, right? So if your short put on the credit spread is 20, by the time it goes near 27, the curve, that T+0 curve on your graph, it's like, if you live in the north, it's like you're going down the sledding hill. You may not be down a lot of money at that point, but from that point on, it's going to hurt. So so generally over the years, if I'm going to adjust the tested side, I would do it when that delta increases by 7 or 8 points. And then when you roll it, you're not buried, right? Whereas the problem is, if at least my recollection, if I'm adjusting at the short strike, to me, in most cases, it's too late. I think it has a good win rate or a good starting to ending, just because if you can handle it going to the short strike, most of the time it'll come back. But boy, you can do that on one contract. But if you had a $10,000 trade on, you could be down $4,000. You could be down a lot if it hits the short strike early. So I think there's some, interesting study. Yeah.
Yeah. Let me speak. Can you go back to that setup for a second? Let me speak to that just for a minute. I'll just give kind of the high level explanation of kind of how the backtest is functioning. So this backtest does not have a stop loss. I'm going to be kind of precise with the terminology. It has an exit, but it's not a stop loss. So in this backtest, the trade is closing when the put side gets tested, and the call side, I think it was tested with a small offset. So it's not, this would not be like back testing a resting order at a broker that has a stop loss. This is something different. So this is just looking at something at the top of every minute. So again, this back test is teaching a concept. It's a super interesting concept. As Dan said, there's unlimited Skittles in the packet here with the flavors that you could test as far as the deltas and the widths. And you know, the other thing is there's the exit is based on test, so there's not a stop loss. There's also not a profit target. You probably want to throw, if you wanted to build out something like this for yourself, you'd want to throw some slippage on there. Even though there's not a stop loss, you're definitely gonna have some exit slippage, maybe a nickel of entry slippage as well. And the point is, though, this is a really interesting starting point, because 22.5 delta is high enough to get some juice, but it's also high enough that as you can see, it's going to win a lot, but it's also going to lose a lot as well. Interesting comment too. If you go back to, I don't know if you can go back to that portfolio graph, but you know, it had a really good run in 2022 when vol was. You can see that, like, not that it's been bad lately, but you can see that in 2022 with that sticky vol. And can you change that to log, Troy? Can you change that graph to log? Pretty much the same, yeah. But it did really well with that sticky vol at the end of 2022, and not bad, you know, not bad since then. But that was a good starting period, as zero DTE was just kind of breaking in. And when I say zero DTE, I mean 5 day a week zero DT on SPX. Of course, we've had 0 day SPX for many years, but for 5 days a week, it's just been more recent here.
Hey, Matt, can I add one quick thing to this, Troy?
Sure.
Is that okay? I'm gonna relabel this. I like this because, again, how I would tweak I'm gonna call this the Cowboy Iron Condor.
I like that.
Let me tell you why. If we could go back to the beginning of this, yeah. What I like, how I would tweak this. I was just thinking about this because you're right. It's especially in a high vol environment. If the only tweak I would make to it was if we go to the short strike, okay, especially earlier in the trade, you'll be down some. But the probabilities are, like with an expected move, it'll come back. So what I would do is when I reset it, let's say I had 3 iron condors on, I would do 4 when I reset it, because to make up for a little bit of that credit, because when it comes back, if I just do 1, I'm losing, my potential goes down dramatically. So if I did 3 iron condors, when I reset it, I would do maybe 4, you could argue 5. If I had 8, maybe I would do 10. And but the idea is, hey, we've gone down probability wise. When you do that second reset, you've got a lot of room, right?
Yeah.
And the only other thing that might, because this has good results, the thing is, this will work. It's just, can you handle, and I'm not good at handling, can I handle on 10 iron condors, you know, being down 20% or 25%? No, I would break out in hives, right? But some people have a better, if they know, but as you know, Matt can handle this. If it's been tested.
No, I could not.
But if it's been tested and you had it, I could stick with it if it was tested. And I looked at it, okay, you add a contract and you do it, I could stick with probably smaller size. But this is, I mean, this is a real interesting concept. I like this one, but yeah, just with a few tweaks.
Well, yeah. Well, listen, we ran a little long. Dan, what do you think tomorrow? I'm going to keep working on this, and I'm going to fully develop the Cowboy trade as best as I can, obviously, and keep going with it. And then tomorrow, maybe if you'd be up for like showing some stuff off and toss of like how you teach these with longer dated stuff as well. Just maybe tomorrow's Condor day. How about that? We'll just say
Condor, and we could even go over. I'll bring up a 0 day iron condor. You know, because right now, unless the vol dramatically goes down, you're getting 100 points, 200 points between the short and the long, the two shorts you can, and then maybe a little bit further out, because with the vol higher, this is kind of iron, like deer season in the, when is deer season in the, isn't that kind of coming up, Troy? Or is
November, December.
November, December is your season. But when you get VIX up, 18, 19, 20, and the market starts stabilizing, that's the, option market's version of deer season. It's iron condor season. So
that's right.
We'll talk iron condors tomorrow. So
I love it. And last thing I'll say about it, the thing that annoys me about condors personally, I mean, when I'm testing, is you have these drawdown periods, right? And the only way I know how to fix a drawdown is to remove iterations. So you say like, okay, well, we're getting killed right now with the VIX 9-day, so you start playing around with the VIX 9-day and stuff. Well, cool, I'm going to do that. Well, it actually doesn't help in the long term because you've removed so many iterations so I was saying that to say, like a condor, to your point, it actually sometimes can kill it in a 28 VIX environment. I mean, it can absolutely do awesome. But here's the painful part. Sometimes it kills it in a 17 VIX environment.
That's right.
Because it's constantly adjusting to the 22 deltas. Right. And that's the thing that's annoying to me is I love putting filters on my stuff to where it only runs if you have high setup trades.
Yeah.
And a condor is just one of those things. Like, I don't know how to do it. I cannot figure out for the life of me how to filter out bad trades.
That's right. Yeah. Well, let's discuss that more tomorrow. Yeah.
Perfect. Yeah. Thank you. You're like my counselor.
24 hours to figure that out.
You're my counselor. Yeah, exactly. A lot of truck driving tonight. Just listen to think about. So, all right, guys. Hope you guys have a great day.